Our stock of the day is Fortescue. It is in the news. The Chief Financial Officer, Ian Wells, the latest among a string of executives to leave Fortescue. Of course, we had Guy DeBell. He only lasted 3 or 4 months, I think. And many analysts have been disappointed by that news. Of course, this comes also after the company's been split essentially into two divisions with iron ore and all the future, Fortescue Future Industries, which trying to develop things such as hydrogen. So, Mark, and we also obviously a focus on the iron ore price at the moment too, and what's going on with China. So, how are you approaching Fortescue?
Well, it's not a company we're interested in because they are price takers at the end of the day. And if you look at their earnings over the last since 2018, or the return on equity back in 2018 was 9. So it had a few years there where it was below our minimum of 10, and then now it peaked at 58. And the last read I've got is about 36. So now that is an absolute consequence of the very high iron ore prices. So they're riding the cycle, which is fine, as they should, which is why they're generating record profits, and they're also paying 9.6% yield as well, which is pretty spectacular. Not many companies doing that. So look, it's the PE is currently 7.4, which sounds really low. We were just talking about JB Hi-Fi, which is a 9.4. So it's lower than JB Hi-Fi. But is JB Hi-Fi's business more predictable than Fortescue's? I would say yes. If something happens in China, and I think they buy 50% or more of our iron. So if anything happens with Taiwan or anything, well, that whole market's going to get screwed, which was one of my reasons why I wanted to lighten my min, because they have quite a lot of exposure as well, being real.
Yep.
So what we want is businesses that have very consistent and predictable earnings. The only trouble is you've got to pay for them. And like one of the ones we're looking at today is ResMed, and ResMed's on like a PE of 40 or something. So you go, well, its EPS growth rate is lower than Fortescue's, which is running at about 46% average now over the last 6 years, which is spectacular. But it's not going to last forever. We don't know how long, but it's paying good dividends. Pretty hard to say that even though the PE's at 7, it's in the red. That's the top quartile, and to be in the bottom quartile, need to be below 5 of its normal trading range. So that happens every year. So you'll probably be able to buy it cheaper if you waited, but it's hard to say that it's not good value, because we're showing it returning 18% on a margin of safety per year over the next 5 years. Now that assumes iron ore holds up.
Yes.
Otherwise, it's all bets are off. So that's the risk. So you're taking a punt on what's going to happen with the commodity. The other thing with Twiggy and all his staff leaving, I think all his senior managers have gone now. The long-standing ones have all left now. I wonder whether it's his discovering
Management
religion.
Style okay.
With liquid green hydrogen and so on. He's become a bit of a fanatic on the whole thing, which that doesn't turn me on.
Right.
I'll be surprised if he ever turns that into a profitable pursuit for shareholders, but time will tell. He may be very good at extracting money out of governments, though.
Right. Yeah. All right. That's the cynic in you. So that you're avoiding it then? Yeah.
Yeah.
Yep. Okay, Scott. Yeah. What are your thoughts then?
So I don't disagree with most of what Mark said, except I should disclose I own some Fortescue shares. This is one of those do as I say, not as I do kind of things. Almost my entire portfolio of companies I've recommended to our members. This one's not, and I bought it because, and I bought it about $15-ish, give or take, because the iron ore price was at then reasonably low levels. The share price was pretty low. The dividend was pretty good, and I kind of went, you know what? On average, I reckon if you buy businesses like that at that point in the cycle, you'll probably do okay. Now, I've never otherwise bought a mining stock. I think the last one I bought was in 2000 or something. Like, I just don't do it. So this was literally a case of, it looked like it was a low-cost producer. The iron ore price was at that point low. The share price was low, and I figured the returns were better on the upside than the downside. But it was too risky for me to say to our members, in Share Advisor, for example, the service I run, we don't tend to take those sort of punts. So this is a strange one for me, where generally speaking, I'd be saying to our members, these things, it was just too high risk. It may have gone very badly. It may not have worked out at all. Had the iron ore price stayed low, fallen further, some of the issues that Mark's talked about with FFI, for example, could well have absolutely bitten us before now, and may still in future, as he suggests. So look, I'm closer to a sell than a buy right now. The price got up a little bit, which is nice. Iron ore price gone up a bit. It is that dividend and that cash generation for now that's keeping me around, because I think it's probably still too cheap to sell, but could be very volatile. It could take me a long time to make my money back. I could end up selling at a loss in a couple of years' time. So I'm talking out of both sides of my mouth here. It's not one I'd recommend to our members, but it's one I own, which I feel deeply uncomfortable about, generally speaking. No, but the reason I didn't recommend it to them was I just thought it was too risky. I think it still remains the case, and probably more so now because the share price has risen. There's simply less room for, I won't say there's a margin of safety, but there's less room for error the higher the share price goes. Another few bucks on the share price, I'd probably be selling, quite honestly. So it's probably a hold at the moment, I think. Because of the reasons we've talked about so many times before, and Mark's enunciated beautifully. Trying to predict the price, who knows? You're a price taker, there's not a lot of opportunity there. These are not high-quality businesses, generally speaking, when it comes to predictability, when it comes to returns on invested capital, return on assets, equity, any of those sort of numbers. So it is a very difficult one for me to sit here and say, I own it, but I'll do that. I think it's probably a pretty solid hold for me right now. I wouldn't recommend anyone buy it, but I'm not selling mine, so that makes it a pretty clean hold. As I said, maybe 24, 25 bucks, and I'm at the exits.